Hello, everyone, and welcome to another episode of Level Up Law, where every Tuesday at noon, South Carolina Legal Services levels up your legal knowledge about an area of law that we practice in. Today, I will be sharing some information with you for our Halloween spectacular episode of Level Up Law, and we'll be talking about zombie second mortgages. But first, let me ask you to check out that QR code on the screen, and you can sign up for our newsletter, which has a lot of great information in it and can be sent right to your inbox. Go ahead and do that. And then we're going to get started with zombie second mortgages. Okay, what are they? What are zombie second mortgages? Well, check this out. What are they and where did they come from? Second mortgages are usually originated by predatory lenders, and this was leading up to the 2007 mortgage crisis, which some people call the Great Recession. So at the time, prior to that, there were a lot of different loan products. Loans were so easy to get. I remember those days. And there were a lot of different kinds of loan products, all kinds. But probably most of the products were, or really a great majority of the products were what we called 80-20 mortgages. The idea there was that a borrower would borrow 80% of the loan amount that they needed with one mortgage, and then they borrow 20% of the loan amount that they needed. They would borrow 20% of that with a different loan, so that would be a second mortgage. And what that did was, for the mortgages that were 80%, that was just 80% of the money that the borrower needed, and so the value of the property was typically going to be higher than that 80% amount. And so that was a really good loan product to sell to other mortgage buyers. And this is where all of what you've heard about during the mortgage crisis with securitizing loans came about. And so, unfortunately, the brokers who were doing these loans were really kind of careless. They were trying to do as many loans as they could, make as much money as they could, sell as many loans as they could. But what began to happen was they couldn't make both payments. And so then entered the mortgage crisis, right? But in the meantime, where did those mortgages go? Those zombie mortgages, we call them, because all of a sudden they kind of disappeared, right? They just went away. And one of the reasons was that during that Great Recession, that mortgage crisis, people were struggling. They were having a hard time paying the first mortgage, let alone the second mortgage. And so a lot of people were able to get those modifications. There were a lot of loan modification options trying to save people's homes during that mortgage crisis and beyond. And then what happened after that was that property values started to drop, all during the mortgage crisis. And so what happens when values drop, but the mortgage balance is still there, even though it may have been modified, then your home becomes what they call underwater. And that just means you owe more on the mortgage than the property is worth. And so second mortgage companies, or zombie mortgages we're now calling them, they weren't going to try to collect their second mortgage or zombie mortgage, because not only could the first mortgage not foreclose and get enough money to pay that mortgage, the zombie mortgages, those second mortgages, were not able to get anything out of a foreclosure. And so they just kind of went away. And during the time that they sort of wrote off their mortgages and just said, well, we're just going to write them off. They're not producing any money. And so let's just not collect on those for now, because that effort is going to go nowhere because the threat of foreclosure is not a real threat. And so what does that mean? Well, borrowers get confused, right? They're like, okay, I guess I'm not having to pay that second mortgage. I modified my first mortgage, so maybe that kind of took care of the whole thing. And so they really didn't know what was going on, but they weren't getting any calls about that second mortgage payment. They were still struggling to make that first mortgage payment, even though maybe it was modified, but they were getting it done. And so then what happens is for 10 years or more, those zombie second mortgages just kind of went to the graveyard. So now they're back. And why are they back? Why are they coming back to life? That is because of really three things. Number one, home values have risen. So there's more value to the home that a mortgage is on. Some of those homes that were underwater are now in better shape. The homeowners have been paying their mortgage, their modified amount, and so they paid off some of their mortgage. Property value's up, mortgage is down, so there's equity there that will be helpful in a foreclosure sale if it comes to that. So what happens with these zombies coming back? They're like, maybe there's something there now. Maybe we can start collecting. So that's what they're doing. They're bringing those back. And often they haven't even contacted the borrower, right? All of a sudden, the borrower say, wait a minute, where's that coming from? And it's some debt collector trying to collect a second mortgage. And that's who usually, not always, but usually it's sort of a mix of companies that are doing the foreclosure. It could be a debt collector. It could be just a debt buyer. Say, well, I'll buy those second mortgage debts and see if I can collect something on them. But also even the original lenders and maybe companies that they assign those second mortgages to are often also the ones who are trying to collect them. So the way that they're going to get title for themselves and get some or all of their zombie mortgage paid with the money that's left from the sale of the home is by going ahead and threatening that foreclosure and maybe actually filing a foreclosure action for the second mortgage. Now, how do they get their second mortgage paid when they file for foreclosure? Because that first mortgage is still there. The first mortgage is current. Payments are being made, and the first mortgage company they're satisfied. There's no reason for them to foreclose, and really they're not allowed to if the payments are current. So usually when you have a foreclosure sale on a first mortgage, right, the property is sold and the buyer gets title free and clear of the first mortgage. Sometimes the first mortgage company is the one buying the property, and then they just pay themselves off, and any other amounts that are available after the sale, if any, are going to go to other liens like a second mortgage. But in a second mortgage foreclosure, the buyer at the foreclosure sale does not get clear title to the property. The reason for that is that the property is being sold subject to the first mortgage because they're not foreclosing. They're good. Okay. So also though, if a second mortgage foreclosure buyer, it might be the company that holds that second mortgage, but it could be somebody else too. It just depends on the circumstances. If they want to, they can pay off that first mortgage and get clear title to the property right away. But otherwise, they're going to be responsible for that first mortgage because it was sold subject to it. So is there any defense to zombie mortgages? Well, I can think of 9 defenses if you are sued for a zombie mortgage or a second mortgage that you hadn't heard about for years that suddenly rears its head and comes back from the dead. So let's talk about the 9 defenses to get to a zombie-free zone. And before we get started on that, I do want to say that all of these defenses can be very complicated. They all depend on the facts and circumstances of any given case. But the idea here is to just give you some thought about how you can challenge a second mortgage foreclosure when it comes up and you're surprised and you're shocked, you don't know what to do. You do have some potential defenses. So let's talk about those. Well, the one we always think of is the statute of limitations. And that means once you have defaulted on your mortgage, the mortgage company only has so many years to file a lawsuit to collect that, right? Well, in South Carolina, that's 20 years. So a lot of states have them much shorter than that, but here it's 20 years. So when the loan owner accelerates the loan or says, okay, you're in default, everything is fully due and payable, the entire amount, that is one point at which the statute of limitations can start, that 20 years. The other time that a statute of limitations can start on a mortgage is when the final payment becomes due, or what we call the maturity date. So that 20-year statute of limitations runs from either one of those dates. And typically, we think of statutes of limitations and things like, car loans or credit cards and things like that. And those are usually like 3 years. But for mortgages in South Carolina anyway, it's 20 years. Okay, here's defense number 2. Does the company that is suing you actually have the right, the authority to foreclose that second mortgage? Okay, they have to have that. And that's something that you can challenge because part of all of that lending that was done previous to the mortgage crisis was giving mortgage loans and then packaging them all up, securitizing them, and selling those pools of loans. And sometimes that was done properly and sometimes it wasn't. And so you always want to make sure that whoever is foreclosing on you actually does have that right to foreclose. One way to find that out is a request for information, and that's under the Real Estate Settlement Procedures Act, which is really helpful and requires that mortgage companies provide all the proper information about a loan, and in particular, provide all the information that you specifically asked for. And all of these things you're going to most likely need the help of an attorney on, but just know that there are defenses and an attorney can help you with that. Okay, we also have some federal laws like the Truth in Lending Act, the Real Estate Settlement Procedures Act, with TILA and RESPA. And those are federal laws that basically establish standards for providing information, keeping borrowers regularly informed of everything about their loan. They have to do specific things and provide specific information. And if they don't, those acts are violated, and that can be not only a defense, but it can also be a counterclaim back against the zombie mortgage company. And also, if those are violated, there are opportunities to get penalties assessed against the lender, get attorney's fees for your lawyer that represents you, and then also, damages, money damages for yourself. Okay, defense number 4, the Fair Debt Collection Practices Act. Okay, that's another federal law that prohibits unfair or deceptive debt collection activities. So quite often these zombie mortgages are, they're pursuing you for collection on these. It's, as I said before, often a debt collector or a debt buyer. And those are folks who are subject to the FDCPA and the requirements that it has. So owners of zombie mortgages may qualify as debt collectors under that FDCPA. And then also servicers of zombie mortgages may also qualify for a debt collector under the FDCPA. And that's the key with the FDCPA. You have to be a debt collector. And so that's a question of fact. Again, something that your attorney is going to hopefully know a lot about for you. Defense number 5. Okay, contract law claims and defenses. A mortgage is a contract, and a mortgage has a note that goes with it. Those are contracts where you promise to do something and they promise to do something. And so standard loan documents do have provisions, for example, that require a lender to comply with federal and state laws if they want to foreclose. Now, those applicable laws can be state law, state of South Carolina, or federal law, just like TILA and RESPA that we just mentioned. So if those requirements to follow different laws are not complied with, so they don't follow some particular law of the state or federal government, then that can be a breach of contract defense. Okay, defense number 6. There are, a foreclosure is an equity case. In the law, you have 2 different kinds of cases. You have legal claims and you have equitable claims. And so a foreclosure is an equitable claim. And so when you are sued for foreclosure, you can raise what we call equitable defenses. And there are a lot of equitable defenses, but 2 that particularly come to mind with zombie mortgages are, number 1, something that we call latches, and number 2, something we call unclean hands. Well, latches has certain elements that you're required to meet, like there has to be a delay, there has to be an unreasonable delay in pursuing that foreclosure, and then there has to be prejudice to the borrower because of the delay. And there's so many facts and circumstances that would reflect in any particular case that the borrower has somehow been harmed by the fact that the zombie second mortgage holder waited so long to file a foreclosure or to pursue collection of that debt. The other one that I think is significant, and there are other equitable defenses, but unclean hands, and that does happen a lot in the area of mortgages, and particularly in the area of those second mortgages that are just now coming back from the dead. And there's oftentimes borrowers have not been treated properly. They've been treated unfairly. The second mortgage holder should have followed certain laws and didn't. So it's really important to really keep records of everything that happens along the way. And in particular, when you, if you are sued for foreclosure of a zombie second mortgage, definitely get with an attorney, talk about the history of it. Have you heard anything at all from them? And if so, what have you heard? And figure out if latches applies because they've waited way too long. And latches is typically going to be a situation where it's a long length of time. It doesn't have to be like beyond that 20-year statute of limitations. But unclean hands is definitely one that often we find in a zombie second mortgage foreclosure. All right, number 7. Okay, there's just general rules about how mortgage foreclosures are supposed to be done. We have the South Carolina Rules of Civil Procedure, and we have certain statutory laws that apply when you are foreclosing on a mortgage of any kind. And as I said before, that mortgage requires that all of those laws be followed. And so these are just some examples of what those procedural rules and statutes address. Does the foreclosing party, again, have the right to enforce that note and therefore the mortgage? Because when we think about mortgage, a lot of people think about that as just, oh, I have a mortgage on my house, that's my mortgage. But the mortgage is one document. There's also the promissory note or the note. So we refer to it as the note and mortgage. The note is where you promise to pay the money. You promise to pay the loan. You sign your name to that. The mortgage is where you give your property as security for that note. And that's where the lender gets their rights to foreclose on that mortgage and try to sell your house to pay themselves on the note where they lent you the money. So note mortgage can be difficult, but it is the note that is being enforced by foreclosure of the mortgage. Also, they have to designate that you've defaulted specifically. They have to have accelerated the note. There's certain specific notices throughout a foreclosure case that have to be provided under the rules. And then also, that means that there may be some procedural challenges when you get sued for foreclosure that you need to raise, and a lawyer can always help with that. It's tough to do on your own, but if you can't get a lawyer, you should at least try. Okay, number 8, defense number 8, and that's bankruptcy. There are remedies in bankruptcy for a zombie second mortgage. The good thing about bankruptcy is that it puts a hold on any kind of lawsuits, and that would include a foreclosure. So if you got sued for foreclosure, that case was pending, and you filed bankruptcy, they couldn't move forward with that mortgage foreclosure case. And so that kind of gives you a little bit of time to figure out how you can possibly deal with this zombie. So also in bankruptcy, you can challenge the amounts that are owed. There's recoupment, and that means there may be claims that you have against the mortgage company, and those can be brought up as affirmative defenses. And that's true really even in a regular foreclosure case, not just in a bankruptcy. And so in a Chapter 13 case, this is where you file bankruptcy and you say, I can't pay all my creditors, but I can pay something. And here's how much I can pay. And then you come up with a plan that the bankruptcy court has to approve. And in that approval process, they determine what debts are secured, what debts are unsecured, and it's the secured debts that are most important. Your mortgage, your car, those are really the two main things. There's other kind of bankruptcies where just all your debt is wiped out. But in a zombie second mortgage, the reason you have to do that Chapter 13 is because sometimes the value of the property is enough that both the first and the second mortgage creditor might be able to get money out of a foreclosure. And so in bankruptcy, though, what you can do with a second mortgage is what we call stripping off the second mortgage. And that means because the property only has a certain amount of value, and that if that's all covered by the first mortgage amount, then that second mortgage becomes an unsecured debt because the property doesn't have enough value to continue to secure that second mortgage. So that's a nice way to get that loan balance on a zombie mortgage to be dischargeable as unsecured debt. Now, sometimes in a Chapter 13 bankruptcy, you might have to pay part of it, but in some cases, you don't have to pay any of it, and it just gets stripped off and turned into unsecured debt. So bankruptcy is an option. It's not really a defense, but it's an option for relief from the zombie. Okay, defense number 9. Most of the that came about during, really during the mortgage crisis and after to modify loans have been really successful. But we mostly think of those as applying to the first mortgages and not necessarily the second mortgages. But there are some options for a second mortgage to be modified or to be granted a forbearance. And so there may be some servicing options, working out some sort of payment plan. And so those are options that you always do want to look at. And here in South Carolina, there is a requirement that those options be explored. So that is definitely something that should be done. Okay, that was 9 defenses to a zombie mortgage foreclosure. If that happens to you, and it's happening to a lot of people right now, as home values are up, mortgage payments have reduced the amount that's owed on that first mortgage. So there's some equity there for those zombies to feed on, and they are coming out of the woodwork and buying those second mortgages, and they're trying to figure out, okay, which properties are in that situation? Which properties can we try to collect on, try to foreclose on, and grab some of that equity to pay that second mortgage? So that's starting to happen a lot, and that's why we wanted to, for our Halloween Spectacular, to give you some information that I hope has been helpful. If this happens to you, you suddenly hear from a second mortgage that you thought was gone when you modified your first mortgage. And there are some things that you can do. You can fight that foreclosure, that second mortgage. There's 2 important things though that I want you to remember. Number 1, consult with an attorney. Check it out, see if you have any other defenses. And number 2, answer the foreclosure complaint. You've got to do that, or they'll just automatically get a judgment against you, and maybe a judgment that you might not have otherwise been subjected to. So definitely do one of those 2 things and try to fight that second mortgage foreclosure. Fight the zombies. Put them back in their graves. All right, that's all I have for today. I hope it was helpful to you. Here's our final information on the how to get in touch with us. And definitely, we handle these cases. We try to help people with them. If it happens to you, call our intake line or apply online and see if you're eligible for our services to help you out with that. We have all these resources here. I would particularly refer you to our online classrooms at learnthelaw.org, because we do have a classroom on foreclosure. And I think that can be helpful to you even in a second mortgage foreclosure situation. So thanks for tuning in. I appreciate it. And I do want to remind you that all of that information that we provide here on Level Up Law is not legal advice. It's just general information for the public to give you some resources so that when these legal things happen to you, you've got a place to go to find some idea of what you need to be doing, what the law is all about. And that's true for a lot of the stuff we do. And again, we do handle these kind of cases. So thanks for tuning in. Be sure to click again on our QR code here, scan that QR code and sign up for that newsletter. And then also go to all of our social media. We have a lot of great resources, and we're constantly sharing them out on our social media accounts, whether it be Instagram, Facebook, Twitter, LinkedIn. We're on all those, and soon to be on TikTok. So watch out for us on TikTok as well. We're excited about that. And that's it for today. Hope it was helpful. I do invite you all to join in next week when we'll have another episode of Level Up Law. We're starting Homeless Month. I have a lot of information on housing for you coming up on Tuesdays in November. And I do want to also thank our producer, Kenneth Elliott, who's always there in the background helping me figure out what I need to do to get this information to you, and for all of our presenters to get good information out there to you. And remember that Kenneth will upload a video of this presentation to our YouTube channel, and you'll be able to find it on the Level Up Law playlist at SC Legal Services on our YouTube channel. So thanks for tuning in. We look forward to seeing you next week. Be sure to check out that Facebook page, our website, and all of our social media for notifications about the episodes that are coming up so you can register. And while you're there, be sure and follow us, like us, subscribe to the channel, particularly with YouTube. We really want to get all these resources out to people. And if you share this broadcast to people who might be facing this problem or other problems, it can really be helpful to them and to us. So just remember that. And thanks again for watching today. That concludes today's Level Up Law presentation. Thanks, everybody.